Good morning, everybody. Today we are taking a look really quick over here at the healthcare ETF XLV. Right, it's been breaking out, and one of the trades, one of the long-term trades, leap calls you could call it, that we've been taking a look at is Teladoc, and we're starting to see Teladoc actually break out. We're going to go over this before we get to the macro stuff. So, Teladoc has had a nice bottoming pattern for 10 months, give or take. Very clear bottoming for Teladoc here. And, 1, 2, 3, 4. And this is the weekly chart. So a lot of room there. The other day it did break out. Teladoc did start to break out of this local resistance. Zoom in on that. It did break out of this local resistance. But today we finally got earnings, and they're still at a loss. They're still not profitable yet, but a lot of good numbers there. Either way, it is now a breakout. We got a confirmed breakout on Teladoc. A lot of room to run here, right? At least back to 44 for the previous resistance, and then you got that gap to fill at 56. All-time highs for Teladoc are around 300. So you do have a lot of room for Teladoc to recover. So I wanted to cover that first before we get into things, right? Now getting to some of the, macro, what are we seeing at the dollar? Is the dollar starting to roll over? Yes, with the dollar is starting to roll over. Look at the dollar. You got the dollar hitting resistance at 101.25 cents. If we do get this rollover in the dollar, man, Teladoc is on fire. If we do get this rollover in the dollar, actually, let me highlight this a little better here. Let's see. Okay, yeah, if we get this rollover in the dollar, that's going to give us some risk on signals there, right? We already had the breakdown, so now we're getting the retest. We already talked about this, the break and retest of the price. Okay, so we broke down, retest, and we want to see that dump. Okay, that's going to give us some risk on signal that this bull market can continue higher. We also have a lot of market breadth signals at the same time. So if we jump through it, I think I put some of these. Did I retweet them? I'm not sure if I retweeted them. Let's see, on my profile. We do have market breadth though. Okay, this is from Jurian Timmer, and he is showing that the equal weighted what he's saying is we have now 87% of S&P 500 trading above their 50-day moving average. 87% of the S&P is trading above their 50-day moving average. That is market breadth, right? We are continually we're still chugging along here. We do have market breadth. Okay. There's some other signals too. Can't find them. Remember, we got GDP running up. We do have GDP moving higher. Estimates for GDP are moving higher. Also, Google and Microsoft beat earnings. Now we have Amazon tomorrow. I mean, today we have Meta after hours, right? We got Meta today, and what is it? Coca-Cola, Boeing already beat. Boeing beat expectations. Wait, let me reset this. Let's go a little deeper in there. And what does the Boeing chart look like? Let's see if Boeing actually made a move here. If Boeing made that move. Yeah, we got a gap up. We got a gap up in Boeing. So Boeing is starting to gap up now. And this bull market has legs. It has legs. Yes, we are seeing S&P 500, it's not even pulling, it's really not even consolidating yet. The S&P is still not pulling back, right? We're still above this trend. Let me get rid of this trend. This doesn't really matter. We're still in this upwards trend. So if we draw this with this trend, look at, we're just still moving up. It's still, we're still in the bull market. We're still in a range, and maybe we do pull in after the Fed meeting to 450. We have more support down here, but so far we are strong, right? The market is still strong. Go to the Qs. We pulled back, found support at 375-ish, 374. We bounced, and we're still holding this upwards trend. So the Qs are still in a bull trend, right? Now, equal weight, S&P equal weight has been chugging along further. We already know IWM's had a strong run, and it looks like it's getting ready to break out of this longer term resistance, right? It is testing that resistance zone. So, right, you had a top here, and now it's consolidating. As long as it can consolidate longer, and with the market breadth continuing up, we're probably going to see another move. The Dow, on the other hand, is on a 12-day winning streak now. I think the Dow's on a 12-day winning streak. What up, Slime Z? Welcome to the channel. Well, how you doing this morning? Manny, what up? What up? What are you looking at? Tesla is holding. Manny, we got Tesla holding. We got Teladoc breaking out. I am looking to enter Teladoc if it slows down. I want to see a sharp pullback on Teladoc. We'll go over that in a second. But yeah, the Dow still breaking out. So we do have this market breadth. It continues, right? It continues to continue. Altcoins not breaking out yet, right? Crypto, we'll talk about crypto in a second. There's a lot of news coming in for tokenization and interoperability, and we all know Chainlink leads in that, so I'm very excited about that. But like I said, we have the breakout in healthcare. Now you got Teladoc starting to break out. So getting back to it, let's go over some of these charts really quick. So we already saw the market breadth, right? Let's pull that up really quick. We already know we have market breadth. Okay, market breadth is big. This is by Fidelity Research. This is Jurian Timmer, the macro strategist over at Fidelity Research. Okay, and he's pointing out, hey, the market is lifting. The overall market is lifting. It is not just 7 stocks. I'm doing good this morning, man. Doing good. Good to see you this morning, Manny. We're just going over more bullish indicators, right? There's still more bullish indicators. So you got market breadth going. Now, market leadership. This is another chart. We're going to switch to this one. Market leadership is also, make sure I get the right one, is we've seen the top 10 stocks, right, move the market, but look at the bottom 490 for S&P, right? Look at that. Let me see if I can zoom in on this. Does it let me zoom in? It does a little bit. So you get the bottom also breaking out above this, right? Above this trend. You get a breakout on the bottom 490. So equal weight is breaking out. However you want to look at it, we're still consolidating in the top 10, and they're going to keep going. We just had Microsoft beat top bottom line. Tesla beat top bottom line. Google beat top and bottom line, and we are getting those revenue estimates also revised higher. We are also seeing the revenue estimates revised higher. Did I retweet it? Where did I put it? Oh, we'll just actually go to macro because they kind of show this. So I'm going to pull up the next chart, right? And that's just market breadth indicators that we are seeing. Now, some people are signaling. So I don't know if we can go, let me see if I could find this. A lot of people are signaling. Actually, yeah, I have it on here. A lot of people have been signaling that, the next downside is going to be this, right? And this is debt to income ratios for all home buyers. And what they're pointing out here is that the housing market bubble, before it popped, you had the debt to income ratio near 40%. We are above that now, right? So we got a new housing bubble, but the housing bubble's already popped, right? Inflation's already coming down, prices are already falling. You might have 3 or 4 cities where prices are still rising, but for the most part, that bubble has popped in the US and it's not falling because people are not selling their houses. Why are they not selling their house? They're not selling their house because they don't want to get higher rates. So the higher rates are kind of keeping selling from actually happening, right? Either way, this is a deck. This next chart dispels all this, right? Dispels all this. And the next chart is we see, yes, maybe the overall debt to income ratio is high, but if we look at household debt service payments as a percentage of disposable personal income, so disposable income, right? Your disposable income, which you have on the side, versus your actual payments on your household debt payments, it's actually falling. Okay, it's actually falling. So I always say, hey, yeah, debt can get larger. It's always gotten larger. For the history of the US, debt has got larger. Debt grows because that's the only way to fuel growth at this point. We're in a debt-based system. They create more debt, they put it on the Fed's balance sheet, whatever they do. And it's all about the payments, it's all about the interest payments. Can your income service the debt payments, right? If it can, we're going to keep this, this rolls on. We keep rolling it forward. It's not good. It's not healthy. Sure, it's not healthy, but it doesn't matter today. It's going to matter in the future, but it doesn't matter today as long as those servicing costs can be covered. All right, let's get back to the charts. Back to the charts here. I think I wanted to share this. Yeah, micro mini. So where's the earnings? We had some earnings stuff for, I know they pushed out some. Oh, well, that chart is also solid. But what I wanted to look at is Alphabet earnings. All right, so check this out. We are starting to see mega cap, and we're just going with Google here. Google's earnings on a year-over-year basis here in red, starting to bottom out. Okay, starting to bottom out. This is just total revenue. Also, this is total revenue, and if we look at this is the year-over-year chart, but the actual revenue is bottoming. Right, we had a I mean, we bottom. It's still moving higher. So Alphabet's earnings are bottoming. We should see the Qs. We still got Apple. Okay, we still have Apple. We still have Amazon, we still have Meta to report. And the reason I point out big tech is because they pull in the most revenue. Okay, there's a reason why most of them are at all-time highs. So that is Alphabet's revenue. If we look at Microsoft's revenue, all-time high. They just hit an all-time high in revenue. And we're in a bear market. Who is it? Morgan Stanley's Mike Wilson, who points out that revenues are going to collapse in the second half. All the bear arguments are starting to reverse. They're all starting to reverse now. So we got Microsoft beating earnings. We already had that bottoming in, what is this, Q1, 2, 3, 4, Q4 2022. It looks like that's where year-on-year revenue actually bottomed. All right, so we're going to keep keeping our eye on this. Now, on the second half, we always talk about money growth, right? And I wanted to point this out. The M2 money supply. We have an issue here? There we go. You kidding me? You kidding me right now? What do we got, a connection issue? All right, so this is M2 money supply. You hear the whole M2 money supply is at a record low. And what have we been saying? If you follow the newsletter, right? Subscribe, check it out. It's free. It's in the links in the description. It's in the bio. That M2, if it continues to decelerate, well, we're at the bottom of the cycle. So it's only up from here, right? And once you start turning up, if you have a longer term view, not next week, not next month, not next 2 months, but a longer term view. Would you say your phone low battery? Oh, no, I'm on we're on Bluetooth. We're on Bluetooth. I'm just going to say it. We're on Bluetooth. Okay. That's where it is. The reason I don't say the real word is because I don't want to get shadow banned on TikTok. So if you want to see the charts, all the charts that I'm throwing up here, it'll be in my newsletter at the end of the week, but we are live on TikTok. And we're going to go over Teladoc because Teladoc is breaking out. Okay. And the overall healthcare sector is breaking out. So look at the M2 money supply. Okay. It is turning up. This is US, by the way. US M2 money supply finally starting to bounce here, right? And it's still in negative territory. And what have I been telling you guys? Okay, now I'm not the smartest guy in the world, but what we've been signaling is when you go into a slowing growth economy, you have liquid. The only answer to the answer to slower growth, the answer to a decelerating economy going near recession, manufacturing, is more liquidity. Whether it's lower rates, whether it's the Fed's balance sheet sucking up more assets and pushing cash into the system, which we are not seeing, or fiscal. And we've seen a lot of fiscal stimulus happen. Yes, the banks are pulling back on their lending a bit, but the fiscal policy has been pumping more liquidity into the economy. And also, you got dividend growth, you got Treasury interest rate growth, and what I mean by that is all this dividend money is literally sucking cash into consumers. And they're either going to go buy stock, and we're seeing that happen, or they're going to spend in the economy. So money supply is starting to turn back up. And that's a good thing. That's a good thing. Oh, I don't want to say it's a good thing, but it's a bullish indicator. Once you get that money supply shoot up, right now growth starts to re-accelerate, and we are getting GDP revisions going up. This chart's a little more complicated. Okay, it's a little more complicated chart here. And what it points out is this is the Treasury. We went over this weekend. The Treasury general account is going up. So government spending is now accelerating, right? Not spending, I'm sorry. Their checking account is accelerating. So they will be able, if anything breaks, they'll be able to spend. If anything slows down, they'll be able to spend. So look for the White House to start spending. We're heading to an election year. I expect them to keep spending. We look at here in the yellow, the RRP, which is the Fed. This is where a bunch of cash is held at the Fed. It is coming out of the Fed. So you're getting liquidity support the markets. Bank reserves here let me finish on the yellow. The yellow, the RRP basically tells us that cash is leaving the Federal Reserve and it's going into capital markets, stock markets, possibly. We don't know exactly, but it is pushing back into the system. It is no longer at the Fed. It's coming out of the Fed. It's going in the system. And that is very bullish for risk assets. That's bullish for risk assets. And we see market breadth starting to pick up because that's just one more variable, one more support for that. Now, bank reserves, bank reserves in red declined a lot, but they are starting to pick up. Bank reserves are actually starting to pick up. I wonder why? Because there is more cash being parked at the bank, so the banks can take risk. So at some point, if something breaks, you get RP liquidity coming into the market. You get the Fed spending. I'm sorry, you get the government spending money, or you got the banks starting to open their lending if inflation goes down. On the negative side though, right, the bad news is, so we have a lot of good news there. Earnings are beating, right? Microsoft, Google, Tesla, Netflix, they all beat top and bottom line revenue. The downside here is that oil prices are still surging, right? This is really the downside, is that oil surging, and this is going to lift future expectations for inflation. So this is a bad thing. This is not good. This is a negative because of the future expectations of inflation, right? And do we get bond yields matching that? Sort of, right? Their bond yields are sort of reacting, but we do have a lot of recessionary data. So all the data is sort of contradicting itself, and the reason we're seeing that is because what is he saying? The reason we're seeing that is because it's a rolling recession, right? We have weakness in manufacturing, but we have strength in the services economy, right? The service economy is lifting, is holding the economy up despite the weakness. Do we get volatility on the VIX? No. So the market is not signaling any type of risks through when we look at the VIX, Nasdaq VIX, nothing. It's actually rolling over. So right here, this move in the VIX that we're starting to see, I'll turn it into a line so you can see it. It's about to break lower. If the VIX breaks lower, then you're going to get the return of Nasdaq. You're going to get the sooner than we thought, because you're hearing a lot of, oh, the Nasdaq's going to roll over, tech's up too much. It just did roll over, but there's $5.5 trillion on the sidelines. A lot of fund managers are reporting that their clients are saying, hey, where can we buy this dip? Right. And you're seeing the earnings beat on Google. You're seeing them bottom in revenue growth. You're seeing Microsoft bottom in revenue growth. So the earnings looks like it's starting to bottom. It is starting to bottom. Bespoke has a lot of data on that, but it does look like we are finally starting to bottom there in the revenue. Today we're going to go a little short because we'll be showing the FOMC meeting a little later on. What up, Hassan? With these good reports, YQs are down. Well, it's rotation, Hassan. I'll flip over to let's flip over to that chart, to the actual chart, the charting chart. See. Oh, why is it not showing up on my feed? There it is. All right. So why are the Qs down? Here, I'll move myself down over here. So I'm going to put the Qs up on the right side. Let's go. Oh, Rivian broke out also. Rivian finally broke out. Look for that pullback in a VWAP if you guys are trading. I don't know if anybody's trading. They're probably not at this point. But Rivian is breaking a large technical resistance level, right? It is breaking out of a trend. And if I were to zoom out a little bit, okay, if I zoom out a little bit, you have that break above 27. It needs to hold above 27. So look for the bounce on VWAP. I think it's going to bounce on VWAP. Rivian could continue have this continuation today if Nasdaq continues also. So zoning in a little bit, you get the bounce, right? You might see the bounce on VWAP, and if Rivian bounces here, it could have a nice continuation to the upside. Right now, 26.64 cents is the support. So if it can hold that support, you got a tight stop there. Just wanted to point that out because I see it immediately on my watch list. I've been waiting for this to break out. So Qs, I'm going to turn this over to the Qs though. Oil is only one factor, right? We had gas at $3 to $4 a gallon in 2013-14, and we were not recession. Yes, because shelter is rolling over, Hassan. So even if oil does chug up, I'm thinking oil just needs to stay below 83.50. Okay. Also, the global manufacturing economy is still slowing, so it doesn't really signal that oil should be spiking a whole lot. There just might be a relief rally that we're seeing here. And it doesn't really have legs because we're not getting a whole. Once the U.S. really pivots and starts, once the U.S. starts pivoting, which I don't think we're going to pivot anytime soon. I think they're going to try to hold rates higher unless we get inflation lower. So either way, I don't think there's enough demand. And yeah, if oil does get, let's say oil does consolidate around 80. Well, either way, okay, yeah, the Qs are dumping immediately. Either way, if oil holds up there, Hassan, then you have shelter also coming down. You have core. Look at oil has nothing to do with core. I expect core to continue to decelerate. So everybody's looking at headlines saying, "Oh, headline is so good because of energy prices," and then core is still sticky. But now we're seeing core decelerate. We're seeing core start to roll over, core inflation, and everybody says, "Well, it's all about core." So we're going to see core finally collapse, and then they're going to say, "Oh, well, look at headline," right? So just more and more cases that inflation is abating, inflation is moderating. I still think, obviously we got to keep our eye on oil above that 83.50 level, but inflation is moderating, right? The core level is starting to moderate. And the more workers that come into the economy, the more supply, the more productivity. And with new productivity tools that we're getting, the better. And we got to keep our eye on the unemployment rate, right? Unemployment and the payrolls are still positive. There's no sign of recession. There's really no sign of recession unless you look at these historical dinosaur indicators that are just not, they're just not signaling the way they. This is a new type of economy. You can't look at indicators from 1967 and think that is fact. We gotta consider it, but it's not fact for sure. So I think shelter rolls over and signals, because here in Phoenix, look, rents were they got up to about 2,400 in rents here in Phoenix, shelter rent. Went down to 2,200, right? Went down to 2,200. Now it's at 1,800 for a couple of the same homes. So we're in 3 bedrooms. So shelter is falling, and that's going to come into the CPI eventually. We'll hear what Powell says. He might stay a little more hawkish today, but also remember the charts we talked about where his hawkish tone is starting to go down. He's starting to sound more dovish, right? So he's signaling to the market, hey, we're not, we don't care if you go higher. We care that inflation remains low, and we want the unemployment. We want employment strong. Some people argue that the Fed wants employment to crash. I don't agree with that. I don't agree with that, because if you get a supply chain break, if you get a break in the supply chain of productivity, then you get supply side inflation, and that's even worse than demand side. We can control demand side. You cannot control supply side inflation. All right. So the real question is, why are the Qs selling off immediately after the big run yesterday? Well, let's throw on the trading charts here. Let's see what we got. We had a Microsoft and Google report. Okay, Tesla, nice bounce off of 261, right off that level that we called, that we'd been looking at too. So Tesla has a nice bounce there. The buyers are coming in. Really, real short collapse here. Real short-term collapse in price. But hey, Tesla has some support. I think the buyers just keep coming into that price. So Google, right? Let's see what Google looked like after the earnings. They did very good. Google's, the war for AI, I think Microsoft's winning that war, but Google revenue growth is bottoming. There's a chart somewhere that I have to find it. Let me see if I could just type it in here. Google. I wonder if they Google revenue segment. Oh, dang, nice. We get cloud revenue, service revenue. Okay, this is a really good website that shows me a lot of details. Okay. Anyways, the year on year so this is about the Google segment. So what we're seeing here, and you guys can't see it here, is you definitely have Google revenue year over year picking up, and dang, this is a lot of info. Let me remove some of this stuff. Google Cloud revenue is still declining. It beat estimates, but the cloud revenue is declining. And let's see, Google service revenue is starting to bottom out. So the services are starting to bottom out for Google. And I can't find that other chart, but the whole point here is that you're seeing, everybody wants to see, is big tech bottoming. Is big tech finally bottoming? And in earnings, and I think it is. I think it is going to start to bottom. Yeah, you have some weakness, but I believe I saw 70% of companies who've reported so far are beating above estimates. Or of the companies who've reported so far, 75% are beating estimates. Okay, they're beating estimates. But if this is the trough, if this is the bottom in earnings, then I mean, the market's going to have a nice rally, right? We're going to see a nice rally in the market. And yes, the Qs have been weak, but we've had a rotation in the Dow. So Dow has been strong. Even though the Qs are weak, the Dow's been pretty strong. Appreciate it, Asan. S&P selling off right now, and we still have big mega cap earnings today, right? We have Amazon, we have Meta, and then we get Apple next week. Let me see, who else do we have? And then we're heading to a Fed meeting, bro. So honestly, Asan, I think the real sell off is just we're heading to the Fed meeting, right? Qs are up a lot. Let's find support. That next support is at 372.70 for the Qs. So we're headed into a Fed meeting, and the market doesn't like uncertainty. It is pricing in a hike. Okay, so there's no surprises there. It is pricing in a hike. It looks like if we look, let me see. Oh, I forgot to look at Microsoft. So Google's hanging in there. Microsoft making new lows. Okay, 334. Let's see where that next support is at. But yeah, the Fed meeting. We just got to get past the Fed meeting. Any surprises? If there's any surprises, it would be that the market doesn't like surprises. So it'd be like, okay, it's really all about Powell's language. How is he going to speak? Is he going to be more hawkish or dovish? Is he going to signal we are definitely hiking again? Or is he going to say we're considering a hike if the data comes in a certain type of way, right? We're data dependent. That's what he's been doing. But if he says we're definitely hiking and we see more hikes after that, that's going to be bearish for the stock market for sure, and earnings. So his tone is going to be very important. Or maybe he says, which would be a huge surprise, this might be our last hike. We might pause in the next meeting. So there's a lot of scenarios, extreme, medium, and neutral scenarios. The neutral scenario would be like, we're data dependent. We are hiking today, but we're still data dependent. We're not sure if we're going to hike next meeting or if we're going to hold rates. So that'd be extreme neutral. So there's just so many tones, which is why we will be live on YouTube for the Fed meeting to try to interpret or at least track what he's saying. And I'll have the comments on the right hand side. We can text back and forth. I'm not going to speak during the meeting. I'm going to let him talk, but I'll definitely give an analysis. 25 basis point is already priced. Yeah, it's already priced in. The 25 basis point hike is already priced in, and it's only 25 basis points. Who cares, right? It's not that big of a deal. By the way, yeah, like I said, all the charts are on YouTube if you guys don't see it. So yeah, that's what we're looking at here. Now, Microsoft selling off, but look at Microsoft's coming right back into the trend. Okay, we're getting Microsoft right back into the trend. So it's not really, and what I got to do is remove the gap strategy. I'm sorry, remove the pre-market. Let's make this bigger and see what did Microsoft do. And the sell-off is actually healthy. I think this is a healthy sell-off because going into as you finish earnings, you want investors to think, okay, is this time to buy? You don't want them to think, oh my gosh, the market's going up. They might get FOMO. But I think it's still healthier for these big mega cap. The stocks have been rallying a pullback to get that rotation into Dow. Oh man, what a dump. What a dump. The Qs are dumping hard. Let me just make sure there was no breaking news. That's a hard dump in the Qs. I doubt it. I think it's just the Fed meeting. Yeah, I think it's just the Fed meeting. I think people are dumping tech stocks ahead of the meeting. IWM, so small caps are still negative. They're holding on there. Advanced decline volume is actually up on the day. So there is volume coming in. I'm looking at the Dow right now. The Dow looks like it's going to break out again. So we're really getting strength into the Dow. People are rotating into the value stocks because there's still, there's still a lot of opportunity there. But so far, S&P just pulling into support and resistance. Right? We actually broke. If we look at this correctly, we actually broke out of this wedge. You could call it a wedge. It's just making higher lows, right? You got the low. I don't have my other tool, but you got the low, higher low, higher low, higher low, higher low. So, hey, do we support this? Do we make a new low? Right? We have a lot of support here on this trend. We got a lot of trend support, and we just made a new high too. So S&P is still very strong because the macro is coming together. Everything is coming together. Now you have a pullback day. Everybody gets frightened and says, I told you this is the top. It's a pullback, right? It's earnings. It's a Fed meeting. We've already ran up. So you need that pullback. And the sharper the pullback on the Qs, right? The sharper this pullback we get, the more exaggerated it is, the better, the more likely you see a bounce come in. Now, the downside is we are testing support. So if it does break through, we have the next support at 372.76. So this sort of looks like a failed breakout here for the Qs, which is fine. Okay, we're not done with earnings yet. We're seeing top and bottom line beats, right? We'll see what Meta does. We'll see what Meta does. We'll see how it goes. Who else do we have for earnings? While we take a look at this chart. Actually, let me zoom in here. Let's zoom in a little bit. Yeah, let's zoom in here. Yeah, you got a lot of support here. We'll see if we can find that support around 375 to 374 for the Qs. All right, so there it is. All right, so earnings. Who else? We didn't even go over the macro for this morning, right? We had building permits, we had new housing builds. Who's this? EU money supply? Is it starting to pick up? The EU money supply looks like it's starting to pick up. Loans to companies picking up. Household loans year over year still negative. The EU economy is still pretty weak at the moment. All right, so Microsoft beat EPS, beat top and bottom line. Alphabet beat top and bottom line. Visa beat top and bottom line. Did they beat bottom line? Yeah, Visa beat top and bottom line too. LVMH, which, dang, that was a big earnings for LVMH. This is LVMH is, I believe, the biggest stock over in it's not Germany, is it? That wasn't the German flag. Maybe it's France. Maybe it's France, but LVMH is a big, and it's sort of just a bellwether stock to sort of give us some insight into the economy over there in Europe. Raytheon beat, General Electric beat pretty well. Okay. Still declining. And then so far this morning, we don't have Meta yet. We got Boeing. Oh, wait, Boeing missed. I guess they have negative EPS. I thought they beat. I thought I read that Boeing beat expectations, just not as bad as they thought it was. Okay. They're still negative. Wow, interesting. Revenue, they did beat on revenue though. Their EPS sucks. ServiceNow, that comes out PM. ServiceNow Semiconductors. And the SMH semiconductor is still pretty strong, the ETF for semiconductors. Coca-Cola beat. So we got Meta. Yeah, we got Meta later today. Is it just Meta that we have? I thought we had somebody else big. I guess Amazon is tomorrow, huh? Yeah, you got Amazon, Microsoft. I'm sorry, MasterCard tomorrow. That's in the morning though. You got Microsoft in the morning, McDonald's in the morning tomorrow. So it looks like we just got Meta then. That's fine. For the mega caps anyway, Meta and Boeing did okay. ServiceNow, AT&T, they're pretty much in trouble. All right, so that's what we're looking at for earnings. So moving on to advanced decline for stocks is actually picking up. So I think it could be that we're just seeing a rotation into, and look, I'll put this on RSV. Is this how you find it here? RSV? No, RS. What's the equal weight for SPX EW? There we go. So yeah, this is pretty clear. Look what's happening here. This is exactly what's happening. Yes, SPY selling off, Qs are selling off, and you have the equal weighted baskets. People are just buying up, right? Investors are buying up the equal weighted basket. They want less risk right now. There's less risk, even though risk taking in equities is risk taking in general. They are choosing the equal weighted basket. So you're getting movement on the equal weighted basket while tech sells off. That's all it is, rotation, right? This is a rotation move. That's what it looks like. We're just getting rotation. Yeah, you're just getting a nice rotation. It's healthy, right? Everybody screamed there's no market breadth. Now we're starting to see it. What are the supports for Google? Let's See, what are the supports for Google? Right now in pre-market, 129. You got 129 for Google in the pre-market. That was the after earnings support, about 129, so it needs to hold 129. It's holding on so far. It's holding on pretty well because it did start to break over Google's breaking out of a big technical pattern on the macro chart. So Google gapped up above a huge the big picture chart. So that has momentum. That means that there's a big flush happening for Google, where so Microsoft's already been at all-time highs. Microsoft made a big move in the past. So there's probably more people positioned to sell Microsoft and less people positioned in Google. And so we're seeing that positioning take over for Google with the breakout. So yeah, Google is just breaking out of a long-term support. It probably needs to hold. I'd say 129 is probably your biggest. I think 129 is your biggest level right now. Yeah, 129 is the biggest level. After that, maybe 127. But yeah, after that pre-market gap up, it's going to be about 129. You could even say this is descending from pre-market. So yeah, 129 here. I'll draw it on here. 129. We'll see if that can hold up. While the Dow is pushing up, also the Dow is 2 bounces off VWAP, 2 tests on PDC. Dow is actually breaking up right now. See, look at the Dow pushing up to yesterday's highs. So rotation, we're seeing clear rotation. That's all, that's what I'm witnessing here is continuation into these Dow stocks. The Fed is expected at the meeting today. Yeah, we already know. We know the Fed's expected to hike rates. Actually, let's get back over here. All right, now Teladoc, right? Teladoc, because I am taking a look at Teladoc here. I'm going to throw this one up. Oh, man, I missed the pullback. Teladoc's on fire. So what happened? RB Capital reiterates outperformance on Teladoc, maintains price target of 35 for RBC Capital. Citigroup maintains neutral weight, lowers price target to 29. Interesting. Credit Suisse neutral on Teladoc, maintains 27 price target. Q2 losses narrow. They're still losing money. So this always sets up for a nice, this is why they've been sold off so much. They're down like 80%. They're still losing money. But once they do turn a profit, that, which could be maybe Q2 of 2024. Who knows what it is? Once a company starts showing profit, that's when the stock really starts to pop off, right? But they have a huge network effect, as far as I know. So yeah, on a technical basis, though, this is more of a technical trade. Oh yeah, volume is picking up in the market. I see the volume right now. It is picking up. There's a lot more volume advancing than declining. So I think it's just going to be kind of shaky today. Anyways, on the big term chart, Teladoc, right? Very, very low. Now, the reason I like this is because the options are insane. The gamma on the option is absolutely insane. And that sets up for a very nice move, especially if it gets above $100 over the next, years, next 12 to. This is more of a 12-month trade. This is a 12-month trade here, and you're hoping that in the next 12 months, the Fed cuts rates, the Fed starts liquefying the market, risk assets come back, the dollar drops, yields come lower. And Teladoc could easily get back to 200 if that is the case, especially if you just get FOMO coming into the market at the same time. And over the next 3 quarters, they make progress. So I'm looking very far out because those options look so appeasing. But you see, we're breaking out here, very clear breakout on the local time frame. We got above this resistance, and we're holding it, and we just bounced. So Teladoc is looking solid. I think ARK has a big piece of Teladoc, and it's holding up. Now that is a bottom right there. That's a very clear bottoming there for Teladoc. So intraday, yeah, I'm looking for that pullback. Maybe it'll form a wedge here. Maybe Teladoc will form a wedge. We'll see what happens. In IO, man, everybody's chasing the Neos, huh? Oh yeah, Neos. Oh man, Neo is forming a wow. Clear breakout over 13.20 cents. See 13.2 for Neo. And then you got a clear bottom at 1290, 1286. I'd say 1290 at the VWAP. But yeah, dang, Neo does look good. Neo is on fire. Maybe it can run up to 14 today because you're getting liquidation. And this is what have we been saying on the stream? We've been talking about China printing more money, and they are doing it. They signaled yesterday. Dang it, where did I put those signals at? They signaled yesterday. Maybe I put it on my notes that they will continue to support their markets. I believe they replaced their federal, they don't have a Federal Reserve, but they replaced their central banker with the new central banker who's going to print more money to support capital and their economics. So it's not on here. It's unfortunate. So they're going to keep printing, and that's why you're seeing. Oh, here it is. Yeah, I guess it is on here. Yeah, let's take a little dive into this. Where is it showing up at? All right, so China appoints new central bank governor in the latest bid to revive a slumping economy. We'll chug through this a little bit, and we'll take our eye. I think BABA is also moving up. So you got Neo and BABA moving up, right? Some of the most popular stocks. China's on fire. This is where all the trading's happening. I could just see the actual patterns forming, right? Wedge, flag, wedge. This is where the strength's at because you're getting that expectation of more liquidity coming in. I bet you JD's moving up. Maybe it's failing in this wedge, but look at all these wedge patterns. That one's not as clear. It'll probably drop out a little more. It looks a little weaker, but definitely BABA, Neo. Neo has the smallest market cap, so this thing probably runs a lot more percentage, right? It's also more dangerous too. It's also easier to lose money here with Neo, by the way. So this is what we're looking at for Neo. Dang, that thing is launching. Goodness, a lot of strength there. And then you also have who's the company that's outpacing Tesla? BYD. Let's see. In China, I think they're outpacing Tesla as far as deliveries, possibly. BYD. I think Buffett is actually invested in them. Oh well. BYD Gaming, but they still do cars, I believe. I don't know. Maybe I'm confused about that. Either way, Neo. Here's Neo. Neo's looking solid, right? Very clear range there. Above this range, break, retest. So if you get something like this, okay, that's what you're looking for if you're trading it, right? I wouldn't invest in Neo though, because you never know. This is purely speculation off of the hype of the stimulus. All right. So China appoints new central bank governor in its latest bid to revive a slumping economy. China has been busy replacing officials in top government roles today, right around the same. And this was yesterday. Yeah, this was yesterday. Yep. News broke that Beijing had abruptly replaced its recent vanished foreign minister. So some dude just vanished, huh? Yeah, interesting. We also learned that Beijing named Pan Gongshang, I'm not going to be able to pronounce that, as the new governor of the central bank, strengthening his position as head of the institution's tasked to boost the world's second largest economy, right? So that's going to flow into the US as they boost their the economy that's going to flow into the US. That actually puts pressure on oil higher, though. So that's the downside. If we need more production for oil. We need more productivity. OPEC keeps cutting production. Maybe one flip will send that price a little lower. 60 was appointed by the blah 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 minister, a former deputy at the People's Bank of China, already named the Communist Party secretary PBOC earlier in July, putting him in one of the top 2 slots of the bank. Just trying to get to the meat of the story. So he's basically let me see, his move to the top of the PBOC signals that Beijing is prioritizing policy continuity at a time when the economic recovery is losing momentum and officials are grappling with various ways to boost confidence. How are they going to boost confidence, right? Their population growth is slumping pretty fast. So what has he actually done? Yellen referred to, oh, I forgot. Janet Yellen probably met with this dude, and then we saw the dollar breakdown right after that. Hey, volatility, by the way, volume is picking up right now. So let me see. Do we have a bounce here? Yes, the Qs are starting to bounce. I'm seeing volume move up. It's the advanced decline for the New York Stock Exchange volume. Volumes are picking up. Advanced decline is also picking up. So there's probably a catch-up trade happening. Maybe the Dow keeps breaking out. Not sure, but it is moving up. So what are they saying here about Janet Yellen? More importantly, his appointment marks the first since 2018 in the top position, blah, 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 governor and Communist Party secretary to be held. Unlike the U.S. Federal Reserve and central banks in Europe, the PBOC is not independent. Spoiler alert, the Fed isn't independent either. Funny. But it pretends to be for popular consumption. Yeah, they're not independent, which is why I believe that what we're really seeing here is a coordination between the Fed and between the U.S. Treasury to really reliquify. You hear we're in QT, we're tightening markets. Not exactly. QT is when all money stops coming in. Rates are tightening and liquidity is tightening. We have not seen that. We have more liquidity coming in, and then you got fiscal printing, right? So I mean, we're not really in QT, as people don't want to believe that we're not really in QT. So yeah. Anyways, they don't make it. They make it clear that they're working together. Li, I don't know how to spell that. Okay. Interest rates and managing currency policy. In addition, governor, blah, 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 oversees 3 trillion foreign reserves. That experience will stand. Come on, man. What are you guys doing here? So they're trying to boost the property market. That's what it looks like. Either way, that's more stimulus coming in. So they're trying to get a little more dovish. Either way, that's they're pulling in a new governor at the central bank to basically figure out how to boost the economy. And you get a boost in the economy, you get the PMIs start to turn up, you get global strength start to turn up. Oh, we also have a digital asset story here pointing to stronger, the whole tokenization boom that's happening. There goes Neo trying to break out also. So yeah, you basically have the expectation for more dovish or more easing in China. And we called this a while back. We said China's going to have to keep easing. They're going to have to keep easing. They have to get that growth going. And now we're starting to see that. And as we see them ease, that actually could put pressure on the dollar up. I just don't think it continues, because once we start printing, that's it. The dollar's going to drop. Hey, the dollar's getting rejected also too here. Dang it. Teladoc making new highs. I haven't even put in an order yet. I'm going to see if it can retrace, though. It might have some downside. I want to see a big pullback into 27. I think about 27. Big pullback into 27 before I go long Teladoc. I'm already long Zoom at the moment. And Tesla, of course. Zoom and Tesla. All right. Also Ethereum Chainlink. All right. So what else are we looking at here? Trueflation is also signaling to us Trueflation is signaling that inflation is starting to go up a little bit. It's from the energy prices. It's from this run up in oil. All right, so now to the economic report. I know we delayed it like 5 times, but for those of you listening, here's what's going on today. Or here's what news we got today. New home sales month over month negative, okay? They were positive the past 3 months. So the housing market rebound is it was kind of quick, now it's slowing down, right? If we look at the year over year data, the housing market is still rebounding. I think it's definitely bottomed. Like the bottom is in for the housing market. And what I'm looking at here is new home sales for June. New home sales, and this is basically when a contract is accepted from a deposit. So you are getting the housing market is not collapsing. It's not rolling over. You're seeing some support there. New home sales. What else? Is that it? We just got new home sale. Oh, building permits. This is a big one because building permits is not just about homes and residential. It's also non-residential. So month on month it was negative. Last month it was up, but the year over year data shows us. I guess this is not year over year. This is just building permits in general, month over month. Building permits are still climbing out of the bottom. So, and what are building permits for some of you? Building permits refer to the approvals given by local jurisdictions before the construction of a new existing build can legally occur. So you're still getting, permits to build. Over here in Phoenix, like I said, prices are down for housing. There's a lot of supply being built. Apartments are being built so quick, it's not even funny. So it's coming up quick. And then we did read that news the other day where Case-Shiller, the economist who started the Case-Shiller Home Price Index, is basically saying, hey, if the Fed cuts rates, you're actually going to see home prices fall. Same thing for Barry Ritholtz. New home sales dropped to, yeah, that's true. That is true. Robert Shiller, he's a Yale economist. Because more supply will get built and then housing comes down. So I'm not an expert in that area, but they are saying that, hey, possibly the housing market prices continue to fall, and we go into they haven't really fell for what, 12 years, maybe longer, maybe like 15 years. All right, so you're getting that rejection there on NEO at the top. Let's see what else. Oh, Bespoke. That's why I need to go to. Bespoke had a lot of stuff that I wanted to inform some of you guys on. Okay, so while market cap weighted S&P 500 has trounced the equal weight this year, all it did was erase the underperformance from last year. So what they're pointing out here is that let's see, what they're pointing out here is that equal weight is starting to pick up. And we already talked about that though, so that's not that important. Next one is, what is this? Oh, equal weight by sector. So if you look at all 11 sectors of the S&P, 9 out of the 11 sectors are starting to see an outperformance in their equal weighted ETFs versus their market weighted ETFs. So again, there is market breadth. There is not individual stocks being bought up. People are buying ETFs, right? ETFs are picking up, and that kind of keeps a bottom. I think this is just going to bottom out the market. You're not really going to get much drop because more than likely people are not trading ETFs. They're saying, okay, the bottom's in. We're seeing that inflation expectations continue to fall. We're seeing that, oh dang, I didn't even see this one. They're seeing that the economy is set to actually not go into recession this year. And so, you get you get fund managers and hedge funds buying a lot of these ETFs. This is another, talk about a PE expand. What is this? Ironic that the tech sector sits with real estate, blah, blah, blah. Advanced decline lines make new highs. Oh, now we're getting a lot of advanced decline lines. So market breadth. making new highs. I think last week we only had consumer discretionary and industrials. Now we got energy, financials, healthcare, materials, S&P in general, consumer staples, so defensive stocks, and discretionary. So now you have 1, 2, 3, 4, 5, 6, 7. 7 sectors out of 11 are making new highs for market breadth. So market breadth is back. I'm gonna have to put that in my report because that's huge. Stealing their data. At 10 a.m., they're having a congressional meeting and talking about the aliens information they've been hiding. Who, the government? Man, there ain't no aliens. That's just to keep you blind from what's actually happening. If there were aliens, I would trust that Elon Musk would have found them already with all his satellites. I rather trust Elon Musk than the government. So when it comes to aliens, talk about PE. Not to say they don't exist, but actual evidence, I don't think so. People are delusional. They see what they want to see. The tech sector trailing 12-month P has risen from the 20s, the bear market lows, October, mid-30s. Huh. Consumer confidence. Oh, yeah. Consumers' confidence is actually rising also. Oh, okay. Dow streaks. 12. So the Dow's up for 12 days in a row. Today might make it 13. Only 4 times this happened in the last, was this 70 years that the Dow's been up this much? Oh, this is interesting. Home prices. Okay, here we go. Home prices. So what homes are falling the most in prices? All right, so these are the areas. If you're in the US, then you understand this. If not, you probably don't understand. So actually housing prices have went up in New York. Wow, this is terrible. New York, Detroit, Chicago, Cleveland, and Atlanta. Home prices are up the most. Wow. I thought it would be Miami also. Yeah, they made all-time highs. Wow. All-time highs. And then who's dropped the most? Let's see. San Francisco housing prices dropped the most, and Seattle. So Seattle, San Francisco. So the West Coast area seems like they're dropping. And it looks like the East, the the Middle East, looks like the East is up. The East Coast, but Chicago's not really East Coast, so neither is Detroit. Neither is Cleveland. New York is northeast, Atlanta southeast. So that's a little more jumbled. It's not really regional. But the biggest drops are Phoenix, Las Vegas, Denver, San Francisco. Obviously, we said Seattle, Dallas a little bit. That's interesting data there. So see, you're getting this rolling recession. Home prices are falling in some areas. There's more prices falling, by the way, than there is going up. So that's the positive here. What up, William? What else have we missed? Oh, this crypto stuff. I'm going to talk about this crypto stuff before we head out. What do you think about Green Dot? Mustafa. Mustafa. What up, Mustafa? I had a football teammate back in the day. His name was Mustafa. That dude is like Barry Sanders. He was fast. We're getting the rebound in Qs, so I'm gonna take this chart off. Oh, look at in Neo just broke out. I didn't even see that. So Neo's breaking out of that range. That's a nice little breakout there. You probably get continuation because, like I said, the volume is picking up in the market. Look at the Qs bounce pretty nicely off the 375 level. Look at that capitulation. That capitulation tells you that buyers are stepping in.
If we look on the bigger time frame, we can see it more clarity. Yes, more clarity there. Look at that. So they can't push price down there. Price just got sucked up really quick, right? Buyers stepped in quickly. Who are those buyers? Well, maybe the FOMO guys, maybe the people waiting for the pullback. They're looking at earnings, right? Look at all this structure. I don't know. People use different names for it. I just say it's a support level. I just keep it simple. A lot of support there at the 375 for the Qs for tech. All that support. We got 1, 2, 3 days of support. Now 4 days of support at that level. Nice little bounce. Let's check on Tesla here before we jump over to, I don't know who dot it. What is green dot? Oh, you had a 10 ETH at 11. 10 ETH at $11. What are you talking about? Ethereum is not $10. Ethereum is a lot more expensive than that, Mr. William. Although I do think Ethereum is set to really start going higher. So is we're getting a bounce on Tesla here. ETE. Oh, ETE. Okay. Oh man, you're buying ETE? Oh, I see. Okay. Yeah, ETE. This is the grayscale ETH. Okay. Grayscale ETH. Nice. I mean, I don't know how I feel about the grayscale ETH, to be honest with you. I'd rather just have regular ETH, but I do believe that it's at a discount right now. So when that discount closes, it should be interesting. Pelodoc is pulling back a little bit. Nope. Pelodoc making new highs, still pushing higher. ETE. Yeah, again, Mustafa, I don't know who Green Dot is. You got to send me a ticker. Got to give me a ticker. What are they speaking? Union Pacific misses revenue. Yeah, I'm gonna go through this little crypto article before we head out because we're gonna come back for the FOMC meeting, which should start in about an hour and a half from now, 2 hours. Man, the Qs are bouncing back pretty quick here. All right, so the sky is the limit. Crypto now braced for a multi-trillion Wall Street earthquake after Bitcoin, Ethereum, BNB, XRP, Cardano, Dogecoin, Litecoin, Solana, Tron, and Polygon price boom. This is stupid. Nobody cares about those. Polygon trash, Solana trash, Dogecoin trash, Litecoin trash, Cardano trash, XRP trash. I probably offended a lot of people, but I don't really care because I think it's funny. Whoever wrote this article doesn't even know what they're talking about. The Bitcoin price has doubled since the beginning of 2023, pushing the combined Bitcoin, Ethereum, XRP, and crypto market back above 1 trillion. Where's the meat of this article? I want to see what are they talking about with DeFi and BlackRock. You have this public blockchain internet of contracts primarily defined by DeFi, decentralized finance, and you have this bank chain world, yes, SWIFT, Bank of New York Mellon, the SWIFT messaging system, short solar stocks. This guy just said short solar stocks. Oh, G dot. Okay, well, I'll take a look at G dot once I get through this article. Anyways, this is a comment by Sergey Nazarov, the founder of Chainlink. Okay, you have this bank chain world in which I think will primarily defined by real world asset tokens. The next stage will be getting these two worlds to overlap, right? So basically connecting I know people say DeFi and they're super maxi about, oh, decentralized versus centralized. Well, hey, You got to change your narrative. It looks like we're going to have a decentralized network that's actually connected to the centralized network, because you can't have a fully decentralized world. You just can't do. You're going to have central entities, right? It's just not going to happen. There's a real reason why we're going to have we're going to actually do a podcast about that pretty soon here. So anyways, he's saying that you're going to get the real world connect with the crypto world, so institutions can connect with the DeFi protocols. Next stage will be getting these two worlds to overlap. The co-founder of Chainlink blockchain network told the block on the sidelines of Ethereum community at conference in Paris. Nazarov predicted Wall Street banks will build their own blockchains. Wall Street banks, right? The too big to fail banks, they're already doing it, by the way. JP Morgan, Wells Fargo, they're all building their blockchains, will build their own blockchains and cross-chain stablecoins using Chainlink's cross-chain interoperability protocol, CCIP, currently in an early access phase. To connect them, the protocol is designed as an open source global standard for decentralized inter-blockchain messaging, data, and tokenomic movement. So, it's just a big word for you're opening the gates for all institutions to access blockchains and actually connect with each other, which is not possible currently. That is not possible. It is not possible for other crypto chains to actually connect with each other. Although you hear about Web3 can't happen. It doesn't work unless all the blockchains, all the smart contracts can actually connect with each other. So CCIP brings that together, which is why we're so bullish on Chainlink. And it has the biggest base in all of crypto. Chainlink has the biggest support base of all cryptos. It is the most underrated crypto, in my view, in all of crypto. All right. And when that happens, beyond the efficiencies and the gains for each of these groups, they will see the blockchain industry as a whole. I think it's funny how literally they're quoting Sergey Nazarov, the Chainlink CEO. Well, it's not really I guess you call him the CEO, the founder of Chainlink. They're quoting him, but they did not put his coin in there at all. I fell sharply, your Federal Reserve, blah, blah, blah. Bitcoin is still fluctuating with the narrow range. Is this just, I don't care about your commentary on Tokyo and Bitcoin, blah, blah, blah. However, Dogecoin. Okay, CCIP has been trialed with Swift. So yes, Swift is using it. That's why I say, hey, this has a real use case. The other cryptos are memes. They're all memes and, buy this because that. The literal biggest messaging system in the world, Swift network, is literally using CCIP. They're experimenting with it. Once they adopt it, for sure, it's going to be lights out. The global interbank messaging network, potentially allowing for cryptocurrency transfers across public and private chains. There are public and there are private chains. Public chains are the one, like Bitcoin, it's public, right? Ethereum is public, Solana is public. You have these public chains, and what you want to do is enable the big institutions with all the trillions of dollars to create their own private chains and actually connect with the public chains and interoperate. And that's where all the value comes in for DeFi, for Web3, right? Nazarov said Chainlink, a network of nodes that provide data and information from off-chain sources to to blockchain smart contracts, is gearing up to launch a pilot. If we go to a pilot with real value moving between different bank chains, I mean, the sky is the limit. Yep. Sky is the limit. Anything else important? This guy's just talking about price here. So this is the big thing in crypto right now, is bridges, being able to bridge the world together, kind of like TCIP with the internet, the current internet. So that's going to be interesting. All right. So G dot. Okay, G dot. We'll check out G dot. G dot. And then we'll look at the biggest base in crypto. Don't lose me here. Oh, G dot, bro. Green Dot Corporation. Who is this? Well, they're trending high. Agree. Jeffrey's Osher resigning from Green Dot, announced second quarter. What the heck is Green Dot here? I'll go look up the fundamentals really quick. On a technical basis, looks like it's trending up, right? You got to maybe you have an entry here. Obviously, you have the let's see if we pull this trend in Green Dot, maybe the break and hold above like $20.50. I think it needs to get above $20.50. But yeah, nice technicals, I guess. It's trending higher. Green dot is definitely trending higher. Doesn't look bad. If we pull it from the bottom, it's in an uptrend. This thing could really fall further, though. It could fall further. It's probably a very small company. Let me see what they do really quickly before. See what they do. Green dot. What does green dot do? Short solar stocks. What, like ENPH? Volume still picking up. I'm looking at that vol Q. Volume's picking up. Advanced decline. Dow's breaking out to new highs again. Market breadth is here. So green dot. This is a small company. 1 billion. Oh, this is credit services. That's a very competitive landscape. Credit services. What makes Green Dot so special? I don't know. Financial services company offers deposit account programs, including consumer and small business. They got to compete with SoFi, Visa, MasterCard, American Express. Who else are they competing with here? Green Dot. Visa, MasterCard, American Express, PayPal, Capital One, Discovery, SoFi. And then you got Green Dot way at the bottom. So maybe for a trade, but as a whole, I don't know. That's a very competitive landscape. Is Green Dot even profitable? I don't think they're profitable yet. See, EPS decline. They bounced in 2020. Oh, I guess their revenue is starting to pick up. Their PE is very low. Huh. Okay, they got pretty good fundamentals. No real. Their debt to equity is really bad though. No margins. Not enough data here. So yeah, I don't know. I wouldn't bet on that. But hey, the trend looks good. If you're just on a technical basis, it looks pretty good. Maybe you know something I don't. I don't know what the mode is though. So cool. Mustafa Green Dot. Short solar stocks. Looks like ENPH. Why would you want to short ENPH? Oh my goodness, ENPH got smashed. I guess all solar is getting. What about J&K? That's a Chinese solar stock. Oh no, it isn't. This is junk bonds. Is it Jink Solar? Remember. Would you hold Intel through earnings tomorrow? INTL. Would I hold Intel? No, this isn't Intel. What is the ticker for Intel? Can't remember. I never look at Intel. The Intel ticker. Is it just INTC? There we go. INTC. All right, cool. Would I hold through earnings? It really depends where your position is at, where your position started. Whether you hold through earnings or not, depends on where your position started. Also, you want to see SMH. What is SMH looking like? It's at all-time highs. This is the semiconductor ETF. And is there more juice to be squeezed? Possibly. And really, what's your time frame, right? What's your time frame? If you're looking at Intel, so VanEck, that's the INTC. If your time frame is next 12 months, sure. I mean, what'll Intel do? It'll pull back into, where's that next support? They'd have to have a really bad earnings report. So maybe it pulls back to 28. If you could hold it, if you can hold Intel, pulling back maybe a good 15%, then you'll be fine. But nobody knows if it's just going to go up or down after earnings. Semiconductor, I don't know the fundamentals of Intel. I don't know what edge they have. I don't know if they have some type of new product. I don't know if they have a new supply. They're doing some type of operations or supply, or I don't really know Intel. So I couldn't tell you if they have edge against the market. I know AMD and NVIDIA do. NVIDIA by far the most. But Intel's still down a lot. So it looks solid for me. I mean, it looks like it's solid. I'm just, I'm not a big Intel guy, but it looks like it can move up a lot. It's still down from the highs a lot. It can double during the next liquidity cycle. But yeah, could you hold through earnings? It's not super volatile, so I don't really think Intel, they would have to have a very, very bad report, I think, to get crushed. But last time, 12%, yeah, they'd have to have Intel's not one of those stocks that's going to just like plummet, right? It's not going to plummet, although it can. Nice wedge there. Nice little wedge for Intel. It can plummet, but it's not one of those stocks that's just going to plummet. It just doesn't have a lot of juice. It's not like AMD and NVIDIA. But I don't know, I don't really know a whole lot about Intel, to be honest with you. So buy XRP. XRP is probably going high. I agree. I'm not an XRP. Oh, you're the XRP queen. I wouldn't buy XRP because I rather have Chainlink. I'd rather have Chainlink, but yeah, XRP probably goes a lot higher from here. Oh, yeah, XRP probably goes higher. XRP has a really explosive, what is it? A really explosive pattern currently forming. XRP USD. A lot of people like the XRP. What do you think about Demo? What is Demo? Demo? Is Demo a ticker symbol? Also, the problem with XRP, it's on Coinbase. Dymo, is it called Dymo? Dymo USD, maybe. The problem with XRP right now. Oh, okay, I see it. Dymo. Heck no. This is a penny stock. I mean, this is no. I wouldn't mess with the crypto. Has a lot of scammy stuff in it. Most of it is scammy. You're not gonna get lucky. You have to trade these on a technical basis, or no. Dymo. Heck no, bro. Only like 3% of people will make a lot of money. A lot of people chase it, get smashed. So heck no. The only crypto that is not Bitcoin and Ethereum that I think has real legs and a real use case that will last, where you don't have to, where you can sleep at night, is Chainlink. XRP also is at risk of reversal right now on the regulation. If it does, it's going to get smashed. So be careful with that. Even though it's on Coinbase, just because it's on Coinbase doesn't mean it can go lower. They often will put in, how do you see Meta earnings? They'll often add and take stuff away. 30. So your average, oh, sorry, I didn't even see that. Your average price is 33.87 for Intel. Oh, I see. Look, bro, I don't like to hold. If you're trading it, heck no. If you're trying to trade Intel, do not hold it over earnings. Wait for the dust to settle. But if you're just holding it for, if you're just holding it for an investment, then yeah, I mean, that's what you do, right? You hold through earnings. And there's a huge support at 31. So even if it pulls back, it'll probably support at 31. So I think that's just it has a smaller risk profile. What's good about Chainlink? Well, Chainlink is the large. Oh, look, I'll put Chainlink up on here. As a matter of fact, let me switch it over to Chainlink price action. We're going to be talking about Chainlink because I think is the most underrated crypto by far, with the most upside. I'm not trying to shield Chainlink at all. Just based off me being in the crypto market for as long as I've been. Got into crypto 2019. Learned a whole lot, Bitcoin, Ethereum, blah, blah, blah. And went through a lot of coins: Meta, Aave, synthetics, derivatives, man, so many coins. What else is that? Uniswap, right? Decentralized exchange. You got the Graph, the decentralized Google, what they say. You have Mana, decentralized, Sandbox, Decentraland, these gaming networks. You have NFT token networks. But Chainlink, what's so good about Chainlink? So look at this base, though. Look at this thing has formed a base since May 2022. So this is going on 12 months, right? 12-month base. Actually, that's longer than 12 months. Yeah, that's a 14-month base being formed on Chainlink. Very strong base. Actually, I'm going to go to the weekly chart. It looks a lot better on the weekly chart. And you can see this crypto is not it's not just going straight down. It's been up for a while. It came out in 2018, fairly new, and big base. But if you go all the way back, this is at the same price it was in 2018, right? When it hit that price, anyways, 2018. Or 2020, if you go back to 2020. So what's so special about Chainlink? Well, Chainlink just released
Chainlink just released, and I'm not talking about price, I'm just talking about fundamentals here. Chainlink released CCIP, cross-chain interoperability, which allows, because the whole thesis of DeFi is that decentralized finance, you have all these protocols that come from Ethereum or maybe some other layer one blockchain, and they create, the same type of infrastructure as the real world, as Chase, as, American Express, all these different financial services, but decentralized. The issue is that it's hard to really navigate that world because it's decentralized. So you can't connect, right? On Uniswap, you can't go buy another coin if it's not an Ethereum. So they don't connect with each other. They're kind of isolated. There's all these fees that you have to pay. You can't really swap things. So CCIP, what it does is it connects the whole blockchain world. CCIP connects the whole crypto world together. Not only that, right? It's also creating infrastructure for literal institutions. Citibank uses it. Bank of America's talked about it. I don't know if Bank of America is using it. By BNY Mellon, there's a bunch of research on Chainlink. And also the Swift network, right? The global messaging payment system, they're using the CCIP network. So there's a lot of promise here, and I'm not saying go jump into Chainlink, but at these technical levels is very low. It's still where it was currently. It's back where it was in 2020 of June, so 3 years ago, and has a nice little base here. And CCIP is just one aspect, right? And what that does is if it connects everything, you can the fees from staking Chainlink, because that has staking too. You're basically seeing trillions of dollars transfer through all central banks, through all messaging systems, through all DeFi. You're connecting centralized institutions with the Web3. So you're actually connecting the two. And this is still very early stages, but so was Amazon, Apple, Google, Facebook, all these big companies that turned out to be hundreds of billions, right? Including who's the big one right now that got up to 100 billion? Stripe got up to 100 billion. Chainlink's like 4 billion right now, 3 billion. They all started off very uncertain, but you do have a real use case in the real world with Chainlink. They also have proof of reserves, so proving that these exchanges have the assets that they say they have, right, to cover the liabilities, or to cover the the assets to cover the liabilities. So they have a lot of stuff. They also have zero knowledge proof. So they're the closest thing. It's called DECO. They're the closest crypto to solving zero knowledge proof. So the transfer of information while with retaining privacy. So transferring any type of data from one entity to another without giving up your privacy, without giving up your data. They're the closest to that. So they're solving a lot of stuff. They've been in the workings for a while. They just don't have a marketing team. They're not out there saying, oh, go buy my coin, blah, blah, blah. So I kind of like it. Anyways, the Qs are popping right now. The Qs are going up. You also have who is it? Oh, hey, thanks for subscribing. Appreciate it. Appreciate it. I don't know what your name is. It looks like you have Hebrew. You're writing in Hebrew. Shout out. Shalom. I don't know what your name is in Hebrew. But I am on YouTube also, bro. If you want to check out where the actual charts are at on YouTube. So, oh, Arabic. Okay. Cool. That's what's up. What do I call you though? What do I call you when I see that, bro? I don't know what I would call you because I can't read Arabic. I'm gonna call you Arabic guy. Okay, so yeah, we've hit our time here. We're gonna come back. We will come back for and if you want to ask any questions, bro, you can always ask me. Yeah, I don't read Arabic, but I would like for you to give me an English name so I can actually say it. Let's see, what do we got going out here? Any red flags? No, not really. Oh, Twitter is now X. That's funny. Oh, look at we got a tweet from the Chainlink God. Go follow this dude on Twitter. Guy's pretty. He helps me understand how Chainlink works. Swift recently announced a collaboration with Chainlink.
and largest financial institutions, FIMs in the world around the CCIP, enabling connectivity with the interoperability between public and private chains. That's the big thing here. Oh, check this out too. When it comes to tokenization, when we talk about tokenization, right? Every tokenizing all assets, Larry Fink, right? You hear Larry Fink, the biggest asset manager on the planet, talk about tokenizing the world, tokenizing bonds, tokenizing ETFs. How do you get tokenization? Well, you need a private blockchain. How do you tokenize everything? You need the private blockchains to be able to connect with each other for that to actually happen. So underlying everything, we still think the CCIP or the Chainlink infrastructure is going to capture a lot of the value when it comes to tokenizing the world, right? And connecting, you're connecting private blockchains to public blockchains. The blockchains we know about are all public, but you don't really know about JP Morgan, Wells Fargo, all these other public, private blockchains. They need to communicate with the DeFi, and that's with CCIP. That's the idea anyway. Anyway, what did this dude just tweet? I'm trying to see what he just tweeted. I know he just he just tweeted something. No, I don't know who that is. Why did this dude erase his tweet? I don't know. What's your price target for Chainlink? All-time high is around 52. I think this crypto cycle, it goes to 100 very easily. I think we hit 100 easy. Hey, I appreciate the support there, man. I think we hit 100 easy for Chainlink. Look at this base. I mean, that's a 12-month long base coming off of a really a 4-year support. So once we push out of this zone, because I'm more of a technician more than anything. Once we break this $10 level, I think we go to 100. I think it's an easy 10x for Chainlink once you break above 100. And of course, you're considering all the catalysts. Does Bitcoin get the ETF? Right? If Bitcoin gets the ETF, Ethereum runs. Ethereum's more like a bond. It's deflationary. Ethereum runs. All crypto rises. And then you get the real narrative if it happens with Chainlink CCIP actually connecting all blockchains, enabling tokenization, zero knowledge proofs, proof of reserves for other block. There's so many catalysts here that connect to the real world, to real banks. So I think it goes to 100. I'm being conservative. I think 100 is conservative in a crypto cycle. All-time high is easily 100 in the next cycle. Now my bull case is 250 for Chainlink, right? I'm not now. Listen, I'm not calling for a 250 Chainlink. I'm saying that I think it can go to 100 pretty easily. It's a small market cap, and a 250 if it's realized. If all the value is realized, it could top tick 250. If we do the Fibonacci retracement on it, right? Let's do some Fibonacci. Do the Fibonacci back to the lows. Fibonacci says the golden pocket is at $37. Dude, who's this guy trying to? I'm not trying to invite you. Why is this dude trying to invite me over here? By the way, if you guys are new, I have a newsletter. Check out the newsletter, link in the description, link in the bio. It's pretty much every Saturday. It's the macro, what's going on in macro. I keep you updated on the markets. It's free. All right, so 0.618. Now the Fibonacci says Chainlink can run to at the max 211. Right, 211. That's what the Fibonacci says. It's not just the Fibonacci. Really, you need the Bitcoin ETF and you need more crypto adoption in general. So there's a lot of fundamental things you need. You need inflows. The Bitcoin ETF enables big institutions to not have to mess with private keys and really start to buy into the crypto network. So can you buy X? No, you can't buy X yet. What'd you say? Snap is falling? Bro, why does this guy keep trying to join my live? Does this dude want to? I just don't want to do that. I don't know if he wants to debate me on the crypto. I always want to debate people on the macro. I think that we're in a bull market, crypto bull market. Everything's starting to come up again. Our big risk is oil. Now check this out. Before we exit today, let's kind of go over the macro. What are we seeing? We're seeing earnings beat, right? We're seeing Microsoft beat top bottom line revenue. We're seeing Google beat top and bottom line revenue. We're also seeing Tesla, Netflix beat top and bottom line revenue. We're seeing a lot of beats here. Okay, big mega cap tech will continue to beat. We're seeing the rotation into Dow, right? Look at Dow breaking out. We're seeing the rotate. This is the highest high that Dow has seen since February of 2022. So the Dow very close to all-time highs. How close is Dow to all-time highs? The Dow is literally 4% from all-time highs. Wow. And we're not in a bull market. And you believe, the only thing that plunges us lower is going to be a real recession, but we're not seeing that in any of the reports. That's why you follow the macro report. We're not seeing a recession. People have jobs, right? The unemployment rate is still low. Payrolls are still positive. They're still printing pretty high. The government is spending like I don't even want to say the analogy because I'll probably get banned if I say it, what I really want to say, but the government is spending a lot. Joe Biden, it's in the reports that I make every week. Infrastructure bill, 1.2 trillion. CHIPS Act, 380 billion. What is the other one? Inflation Reduction Act for EVs, another 300 billion. Internet Initiative, 42 billion. Student loan debt, now that they reversed him, he's still trying to get that student loan debt. So he's going to keep stimulating. How do we know he has enough money? Or let's just say the White House, let's just say the US Treasury. Why do they have enough money? Because the reverse repo, the RRP, let's see if I can put this up here. Overnight reverse repo agreement. There we go. Check this out. So, because look at this is something I've had to learn over time. The reverse repo facility is where cash comes into the market. This is basically the Fed's, I just call it their savings account. It's not really their savings because they pay interest to anybody. So why is this going up? This is a facility at the Federal Reserve, or think of it as a way where you can park your money. You take it out of the current system, and you put it in the Fed system, and they'll pay you interest. What interest are they paying you? They're paying you the Fed funds rate, right? They're paying you the Fed funds rate. Where's the Fed funds rate at? Let me add the Fed funds rate on here. Fed funds. All right. So Fed funds, right? This is pretty much the interest rate they're paying you. The Fed funds rate is at 5%. So what's happening here is as the Fed funds rate goes higher, the cash at this reverse repo is getting paid the interest rate of the Fed funds rate. It's not exactly the Fed funds rate. It's probably more like 4%, 4.25%. So point being here is this money this got up to $2.5 trillion of liquidity, which is why I was like, hey, the market might bottom here because there's a whole lot of emergency liquidity to come back. And if we do have any type of crisis or any type of rollover, right? So my whole point here, or to get to it, I know I'm saying a lot of stuff. The reverse repo facility, the Fed savings account is starting to drain, right? It went from 1.2 trillion. Now we're down to 1.7 trillion. So almost $1 trillion of cash parked at the Fed is back into the capital markets. What is it filling? It's filling reverse. It's filling. It is filling the Treasury General Account, the TGA. Oh, let's throw the TGA up here. What is that? TGA. Let's see if we could actually get this. The Treasury General Account. Treasury General Account. Let's see Treasury. Why didn't it just pull up Treasury Deposit Fund? Let me see if this is it. Is this the TGA? Yeah, this is this isn't the TGA. Treasury, let's see, what is this? The Treasury what? The Treasury General Account. This is the Treasury General Account? I don't think it is. Either way, the Treasury General Account, maybe it is. It just looks kind of wonky. It looks kind of weird. So what we're seeing is the Treasury General Account is coming up. Wow, how interesting is it that we see the Treasury General Account is starting to bounce, right? Coming up in cash. And I think this is actually lagging. It should be higher. It's starting to bounce while this reverse repo comes down, because what's happening is all that cash at the Federal Reserve is leaving to go buy Treasury bills because they pay more interest. So they're leaving the Fed to go to the US Treasury because they pay more interest. And what that does is it gives money to the US Treasury, which means Joe Biden and the White House have more cash to spend, whether it's for defense, whether it's for the economy, whether it's literally just for the election, whatever they want to do, they can spend more money. So that money is getting, going into the markets either way. So I just think, hey, this is a very bullish backdrop. And now we're seeing, as we showed earlier, where's my my Twitter account? Oh, my X account. Sorry, this is not Twitter anymore. As we showed earlier, we're seeing, bro, why am I freezing here? Come on, man. Come on, computer. This is an M1 chip. Literally not working. Oh, there it is. It's on this one. So now we're seeing, look at this, M2, US. Oh, let me move myself here. You guys can't see it. All right, US money supply, M2 starting to bottom. What does that mean? What is that signaling? That is signaling that as growth slows, what it's really signaling is that money supply is picking up, right? Liquidity is picking up. This is so bullish for crypto. This is why I think crypto has the biggest upside here. The biggest upside because this M2 is starting to pick up, right? So you got M2 picking up. You see the Treasury general account starting to fill back up, so they can always deploy more capital to make it simple if they have to. The RRP, or the Fed's facility is draining cash. Well, hey, there's still $1 trillion left to come into capital markets or to the economy or whatever it is they want to go into. Well, if stocks turn risk on, what's going to happen? Why was the RRP at 0 in February and before that in 2020? Because there was no incentive to be at the RRP when stocks were hot, when there was risk being taken into the market. So I expect the reverse repo facility to continue to drain if the Fed cuts rates. Why would the Fed cut rates? Because inflation drops below target. So if inflation gets below 2%, the Fed cuts rates, they cut the short-term rate, everybody leaves the RRP because guess what? They're not getting that interest anymore because the Fed cut the rate. So they leave the RRP and it floods right back into the capital markets. It's going to go into the best stocks, probably technology. Maybe it goes into Dow stocks, value stocks, dividend stocks. Who knows? Either way, it's going to support the market. So that's why the macro backdrop is so important. And that's why I say it is turning. The macro is turning. This is a bull market and there's more fuel. The worst thing is to see oil start to surge again. So oil is moving up, but look at, we have a lot of resistance at this 83.50. Hopefully, if you're a bull, hopefully we get a rejection there. Maybe it doesn't even get there, right? So always watching that. Next signal, the dollar, right? The dollar dropping. This is the other signal. If the dollar drops, if the dollar rolls over, that's a huge risk on signal. The markets have always chugged higher, right? These highlights are all the way back to 2017. If I add S&P 500 here, or I'll just add the SPY. This is where you get really big, big moves, big secular moves in the SPY. When the dollar drops, you get the correlation of the market really starting to get some fuel. Same thing here. The dollar dropped and you get the SPY moving up, right? If we even go back in history, it's the same thing. Same thing. Now, this was different. It was this 2012. You have the dollar. No. This is the same thing. The dollar moves sideways. Even if the dollar moves sideways, we still are risk on, right? Here's another one. Big drop, right? Big drop in the dollar at the top, and then you see the market move up. So the correlations are starting to align. All the macro is starting to align. And I think the only thing in our way is, of course, a black swan. There's a lot of cash on the sideline, so that's also pumping markets. These 10-year yields also are kind of in the way. They're pretty elevated. They're at the highest level in history, but those yields will need to come down. The government's going to probably start buying bonds. It's called yield curve control. It's what Japan did. Actually, Japan does it all the time. They buy their own bond. Their government literally issues bonds and buys them back to lower the interest rate. So if we do get the yields coming down, that's going to set off risk assets even further. And I think that does happen because, I mean, what are you going to do with high interest rates? We just saw the largest government interest rate spent. The government, look at, where's that chart at? This is what I'm talking about here. This is what I'm talking about. If we look at the chart, this is just literally psychology, right? This is just what are they going to do? What we're seeing here is there's a rising cost. Not a rising cost, but the interest payments for the federal government are just too high, right? The interest payments are too high. So right here in the white, you have the interest payments as a percentage of GDP, meaning our interest rates are now the payments, literally the interest payments, just like your credit card that you pay monthly, are larger than GDP. They're becoming bigger than GDP. Okay. So that can't stay. That cannot, they're not just going to collapse. They're going to end up lowering rates so this can come back down. They have to lower rates. So those bond yields will come down at some point. Now, I think they just need inflation lower so they can start printing again. Okay. They need technology to be more deflationary to bring more productivity so things can come down. And this in the red is basically the Fed's ownership of federal debt. They've obviously offloaded debt over, this is QT. They've offloaded debt over the past 12 months. Is it about 12 months? They offloaded debt. So they're basically selling debt back into the market, which is why rates went up. This will reverse. This will have to reverse at some point as the economy starts to slow down, right? So I don't expect that to keep up. Now, oh, there's my mouse. Now, the other chart is, the other chart that I'm super bullish on, I think we showed this yesterday. The rising cost of debt. Where's the spending one? There's one that shows that basically the interest rates are now exceeding, interest rate as a percentage of GDP, or the interest rate on the debt is actually exceeding. Yo, what the heck, dude? Where's my damn chart at? I swear I put these on here all the time. Oh, there it is. All right, here's the other chart. Now, this is interesting too, right? And this is why I say the rates will have to come down at some point. They're not going to let the whole economy collapse, but they need inflation lower. They need the progress to continue. And that's why I say, well, hey, if oil breaks out, we might be in trouble. So we're keeping our eye on that. Is the biggest risk to the market is oil right now, right? Anyways, we look at the annual interest payments. The annual interest payments for the government are now exceeding the defense spending. So you have more money you're spending just to pay the interest off of your debt than you are spending for defense. That cannot continue. That cannot continue. At least the trend has to slow down. They have to get rates lower to slow down this, or everything collapses. Now, I know there's people out there that say, oh my God, everything's going to collapse. There's a black swan waiting to happen. Bro, the Federal Reserve, the US Treasury, you think they don't already know this? These guys are light years ahead of us, right? This is why we're looking at a soft landing right now, because they're actually coordinate. They see all this. They know this. They have the best people in house. It's a surprise that gets the market to the downside. It is a surprise that hurts the market, not this. We already know this is here. We see this. So it's happening, right? So I think they debase the currency further to monetize the debt. I think they eventually start QE up again. And that's why we have fiscal policy. Now, the chart that that makes the market go higher is right here. This is literally what's happening. There's more cash on the sideline. These are professional fund managers. Yeah, retail investors like me and you, regular people, we're buying the market up. But professional fund managers are still record cash. They're still overweight cash. They're still underweight equities. I guarantee they're underweight crypto. So they're very underweight. So as this starts to, as the more you get more surprises to the upside, which are earnings are bottoming. Oh, okay. Inflation is dropping, faster than we thought. Okay. What else? The economy is starting to recover. We're seeing GDP getting revised up. Okay. Then they start to get more bullish. Therefore, markets continue to chug higher. And that's why we're seeing this wave to FOMO continue. Right. That's all I have for today. We're going to cut it off there. I'll be back in about an hour and 30 minutes, hour and 15 minutes for the rate decision. Maybe I'll let the market, actually, I'm going to be back in 2 hours because, Powell speaks at, well, my time, it's going to be 11:30. So I'm going to be back 15 minutes beforehand. We'll go over maybe a little earlier than that. So you'll see it. I'll put it up on YouTube, and, we'll hear what he has to say, because really we know he's going to hike rates 25 basis points. If he doesn't, super bullish for the market. I think he does hike rates, but if he doesn't hike rates, I'm sorry, if he does hike rates, we want to hear, okay, what is his language? Is he more hawkish? Is he more dovish? And also what we've been tracking lately, and it's in the macro report, which is why you should go subscribe for free, is for free, right? I like to see new subscribers. It motivates me to keep writing, to keep pushing this information out, so that people can see, or can have another perspective on the market. What we're seeing is that, okay, I can't find the chart. It's basically showing that the Fed's optimism, they're using artificial intelligence to track his language, and they're showing that it's showing that he's more optimistic every meeting. Every meeting he's becoming more optimistic. Also, on the flip side, he's becoming more dovish in his language, right? And then as rates are still elevated. So it's really going to come down to his language. Is he more hawkish? And then we're going to get questions from CNBC. We're going to get questions from the public, and how he answers those questions are going to give us insight. Is he ready to pause? Is he more optimistic? I think it's going to be a nothing burger, but that's why we're going to track this. All right, I'm out of here. Appreciate you guys. Stay blessed. Well, shoot, I'll catch you in a couple hours. Peace out.